Hey everybody, it's John King. It is Friday, the 3rd of May, and coming to you live with my weekly market update. So thank you for joining me. Got a lot of important things today. We're going to talk about the Fed and what happened on Wednesday. So the Fed did their every 6-week meeting. They did it on Wednesday, 2 days ago. So I'm going to share with you what happened and what the outcome was. Jobs report came out this morning. That's super big news. And then I want to talk more about other ways to get where the market's going, first of all, and then other ways to qualify for a mortgage where your lender might have said no, and share with you some quick stories on some ways that I've been able to help people out. So good morning, Billy. You and I think, have a meeting in about an hour, so looking forward to talking to you then, Billy. But thank you for joining me. So guys, here's what's going on. So first of all, every 6 weeks, the Federal Reserve gets together and they set policy. It's at that policy meeting that they decide if they're going to raise or lower the federal funds rate. Now, that is not the mortgage rate, but that is the rate that every financial instrument looks at, because ultimately that's what the federal government charges to borrow money from them. And so when you borrow money from me, we're looking at, well, our worst case scenario is we got to replace that money with money we're borrowing from the federal government. And so we've got to look at what their rate is. And the Fed had been raising their rate for the last 2 years. They decided in December, we're done raising our rates and we're going to pause for now and we're going to see what happened. And mortgage rates came down when that happened because the Fed said, hey, we were raising rates because inflation was out of control and we were worried about the jobs market being strong and inflation going really high. The Fed needed to cool the inflation market. And so what happened is the inflation market took off again this year. We saw an inflation report in January, February, March, and April that all showed upward movement in inflation and saying, hey, maybe inflation isn't over with. Maybe we've got a bigger problem with inflation here. And inflation started to show some signs. Maybe it's coming back down a little bit. But the bigger worry, or equivalent, the equal sized worry, is jobs. The jobs report is a big thing the Fed's keeping an eye on, because the Fed is saying, look, if more people are working and they're adding more and more jobs, then you're going to have more money for these people to spend and they're going to go buy more things, which is going to drive inflation up even higher. So they actually want to see jobs slow down. And we saw that this morning. We finally got some good news on jobs. Now, again, it's kind of backwards when I say it's good news that we did not add a lot of jobs. And no, that's not good news. But it is good news if you're looking to buy a home and you're looking for rates to go lower, is we saw that the jobs report, they expected to have 240,000 jobs created in April and only 175,000 were created. That meant the unemployment percentage, the number of people, percentage of people who can't find a job compared to the number of people that are looking for work, ticked up. We're at 3.9% of the people looking for work cannot find a job. The Fed is looking at that unemployment number, wanting it to go up. And as the unemployment number goes up, the Fed is more likely to lower interest rates sooner. So the market on Wednesday, the market didn't know that the jobs report was coming in good today, but the market on Wednesday said, we feel like the Fed's probably going to lower rates twice this year, down from the 5 or 6 times we thought, but we still have an expectation the Fed is going to lower rates. And there's 3 things that Jerome Powell said on Wednesday that matter. The first thing is what he didn't say. He didn't express any real concern or new concern over the reports we've seen over the last few months. And everybody was kind of freaking out and expecting that the Fed was going to say, hey, these reports that we've been seeing, they're causing us some heartburn. They didn't say that. They said, hey, we're seeing what we're expecting, and that's why we pressed pause. They never said they were going to start lowering rates. They simply said they are pausing the raise of interest rates. The second thing the Fed said is we are more likely, our next move is more likely down than up. That makes the market feel better, because there's some people that were worried that the Fed is actually going to have to raise rates again. And Powell did a good job of reassuring everybody, I don't see that happening. Don't know when we're going to lower rates, but we're going to see lower rates before we see higher rates. But remember, the Fed doesn't control mortgages. So mortgages move up and down based on us predicting what we think the Fed is going to do. And Wednesday, we saw rates move down. Yesterday, we saw rates move down. Today, we saw rates move down. So we've seen rates move down pretty good. The final thing the Fed said is that they are going to do whatever it takes that is whatever is necessary to get to their goal of controlling inflation and keeping employment as high and full as they can without consideration of politics. Now, why does that matter? Because we're in an election year. And in an election year, there's a lot of concern that the Fed's going to play games. Now, I don't know if they're going to play games anyway, but it did make the market feel better that they're not playing games. And that's something really, really important that the market needs to know, is that the Fed's going to have the confidence to make moves without worrying about what that's going to mean to either one of the, or any of the candidates that are vying for positions in this year's election. All right. So I think we are finally turning the corner. I think that we saw rates moving up this spring. I think we're turning the corner. I'm not telling you they're going back down into the low sixes, but I think that we tickled the sevens. We were in the low to mid sevens, and I think they're going to start coming back down. As a matter of fact, we've kind of been watching CalHFA's rate. I know a lot of you guys have seen my Dream for All videos. Y'all know the Dream for All reservation portal has closed. We've got a lot of clients who are in there waiting to hear on what their status is, but I like using CalHFA's rate as a benchmark. It had been as high as 7.25 to 7.375. Today it's down to 7. So we're moving the right direction, and that's a really, really, really good sign. All right, here's the last thing I want to talk about. And this is an area I haven't spent a lot of time talking about, but I'm going to spend a lot more time going into the future. And that is, don't give up if your lender says no. There are so many different loan programs and loan options that are out there. And I'm going to share with you over time different scenarios in which we were able to help people. Today, my scenario is actually with a client who got turned down from a lender not 2 weeks ago. And they actually, about 2 weeks ago, the lender said no. And then they asked me to look at it. And then the other lender said, oh, maybe I can still do it. And they drug their feet for 2 more weeks. And it wasn't until last week on Friday that I was told, John, the other lender can't do it. We need your help. And this client runs a business, but he doesn't show a lot of income on his tax returns, doesn't show enough income on his tax returns. And he's buying $1 million home. Now he's putting 20% down, but there's a lot of challenges with his file. He can't prove that he pays rent. And when we're using alternative proof of income, we've got to have some stronger pieces. We've got to have, really good payment history on the fact that you've paid rents. We've got to show that on your credit report, you've got a lot of depth of credit, that you got a lot of accounts. He doesn't have a lot of accounts. And so I dug deeper, and this really is about the quality of the loan officer that you're working with. Because as I talked to him, he is an immigrant to the United States. And just in the last couple of years, he was working with an immigration attorney to get his citizenship moving forward. And he had letters of recommendation written from lots of people within the community that he'd done business with, current and prior landlords. And I got him to get me those letters of recommendation that had been written for the last 3 or 4 years by different people at different times. Some members of local law enforcement communities and other civic leaders. And I was able to put those in the file and get it in front of our underwriting department. And it made the difference. And it's really about understanding the art of lending as much as understanding the science of it. And so this is really very much an industry where the person you're working with can make a really, really big difference. So we're going to get this client his home in the next week and a half. And it really comes down to how we packaged it. And that comes down to a conversation that we have. And so I'll wrap up by simply saying, hey, the biggest thing that I will tell you is not all lenders are created equally. And that the thing you should be thinking about right now is the challenges that we're dealing with and how to make sure you have somebody that can see those challenges and help you avoid them before you run into a brick wall. We're going to see a lot of change this summer when it comes to the real estate world. We've got the lawsuit that was filed over the last few years about realtors and real estate commissions that was settled about 45 days ago. And that's going to come to roost. That's going to become required come July. And that's going to change a lot of how your negotiations work with the real estate agent that's going to help you buy a home. And I'm going to help guide you through that. The thing I want you to remember is this is not a time to go it alone. It's not a time to try and buy a house without a real estate agent. It's not a time to try and search for the cheapest lender that's out there. You want to make sure that you've got a team, a set of people that are going to make sure that we're looking out for your best interest and that we can see the landscape ahead, that we can survey that landscape and figure out what your challenges are going to be and help you to overcome those challenges. So if you know somebody who's looking to purchase a home and they're shopping around to say, hey, I'm talking to 10 different lenders, I'm not saying there's anything wrong with talking to people, but look at their history, look at their pedigree. There's a system that you can search the employment history of loan officers, see who you're working with. See if it's somebody who was a bartender a year and a half ago or somebody who's been in the industry for 24 years like I have, because experience matters in this industry. And we are super, super competitive, but there's a lot of people who only operate on price. And they say, I'm gonna give you the cheapest interest rate because that's all that matters. Well, they're giving you the cheapest interest rate because they're making next to no income. And that's like you saying to your employer, hey, if you hire me, I'll work for minimum wage. Well, yeah, they'll hire you because you'll work for minimum wage. But if you're willing to work for minimum wage, are you very good at what you do? That's the challenge. That's what you have to decide as you go forward and you start hearing your friends and family say, hey, there's no need to use a real estate agent to help you buy a home. There was a lawsuit that says that they were overcharging you, which is not what it said. But there was a lawsuit that said they were overcharging you and you should just do it yourself because you don't need them. You can use the internet to find a home and you can call the listing agent. It's not that simple. And if you call the listing agent, you are asking the person who has a fiduciary responsibility to the other side to also represent you. It's like hiring the same attorney to represent you as the one representing the guy that's suing you. That's probably not a good idea. And so you have to decide, how am I going to go forward in this? And the biggest thing that is changing is the fact that as a buyer, you are going to have, in California, actually nationwide, nationwide, you are going to have to sign an agreement with your real estate agent on how much money you're going to pay them when they find you a home. What percentage of the price of the home are you going to pay them when they help you find a home? In the past, that's been paid almost exclusively by the seller. Now, here's the thing that's going to freak a lot of you out. Well, I don't have the money to pay them, John. I can't afford to write a check to somebody to pay my realtor, especially when I've got a minimal down payment. How in the world am I going to be able to write a check to pay for my real estate agent? You don't have to. Now, you're obligated to, but you can ask the seller to pay for your realtor's commission. And you can write that in the offer. The problem is the seller doesn't have to agree. The seller doesn't have to accept that request. And so even if the seller said, I'm willing to pay for the buyer's real estate agent, some of your competitors who are writing offers will say, you know what? No need for you to pay for it. I'll cover it myself. That will give you more money out of the sale of the home, Mr. Seller. I want you to pick my offer. And so that's going to be your challenge, is to make sure that you're negotiating a stronger offer. It's really going to come down to having a really good real estate agent representing you. Because if you go with somebody who doesn't understand the art of negotiation, they're not going to be as successful in getting the seller to pay for your realtor's commission. So don't freak out. Don't worry about doing it on your own. Don't say, oh my gosh, this is something that I need to do without representation. Having the right representation, both from a lender's perspective and from a buyer's agent, realtor representing you, is more critical in this market than it's ever been. So I'm going to continue to give you more details about this as we get closer to this being a requirement. But you're going to see more and more realtors, even right now, that are saying, hey, you need to sign this agreement. It's called a buyer broker agreement. You got to sign this agreement that you're going to work exclusively with me and that you are going to use me to buy your house and that you're going to pay me this certain dollar amount. Just remember, even that's negotiable. The truth is, when you find a realtor that you are committed to working with and they're going to take you out shopping for a long period of time, it is the right thing to do to sign an exclusive agreement to work with that person. But if you're meeting a realtor for the first time to go look at a house once, and they say, hey, I want you to sign an agreement to work with me for the next 6 months, there is nothing in the law that says you can't say, no, I'm only willing to sign an agreement to work with you on this home. And if you impress me and I want to work with you, I'll sign up for a longer period of time. Don't let forgive me for how I say this, gang, but there are realtors out there that don't understand what they're doing, and I'm going to call them a bad realtor. Don't let a bad realtor force you to sign a contract to work exclusively with them, because you need to make sure that you trust that person. Now, if you know them, they were referred, you've had great conversations and meetings with them, sign the exclusive agreement, because they're committing a lot of time, energy, and effort into helping you find homes, and they don't get paid unless you find a home. So that is just like you going to work every single day and telling your boss, hey, I'm going to work every day. And in the end, you can go ahead and write my paycheck to somebody else if you want to. That's not right. That is not right for you as a buyer to do that. That's not right for the realtor to be expected to go out and take you to looking at homes and spend a lot of time with you and not know that you're going to use them to buy the home. but don't feel pressured to sign an agreement to have a long-term relationship with a realtor you met with the first time today and you don't know them from Adam. That's the most important thing I want you to remember. Gang, thanks so much for listening. Hope you all have an absolutely wonderful weekend. Call me if you need anything. If you have any friends or family who need help, click the QR code above and get them connected to me. Thank you. Talk to y'all soon. Bye-bye.